Kunj Bansal, good afternoon.
Good afternoon.
Most of the experts who've come on the channel today are saying that from last 1 year they underweight IT. Have you also been lucky? Have you also been underweight IT?
So we need to differentiate that the performance or outperformance comes because of the market momentum or market force, or by way of the genuine selection of stocks and of course sector weightages. Post facto, it's easy to say a lot of things. It's the same IT sector which was a very decent performer, in fact, an outperformer. I think hardly 2.5, 3 months ago, and it did consistently well. So instead of getting taken in by the shorter term movement, we need to kind of very clearly distinguish that if we are looking at the market from a trading or a short term point of view, we take a call accordingly. And if we are looking at a medium term point of view, we take a call accordingly. Now, even for a medium term, let's keep in mind that we are at an index level which is almost at a 2 year ago level. So to that extent, for a medium term investor, also index hasn't moved anywhere. Of course, in that 2 year period, there have been many sectors which have been outperformer, many have been underperformer, and many have gone through both the phases of outperformance and underperformance.
Just wanted to understand what's your take on Zomato. Many are finding merit in investing in this or, for that matter, many other new age tech platforms after the recent bout of correction that's taken place.
So few things. One, just because some international major takes a minority stake in an Indian startup doesn't change the business model. It might, if at all, increase the financial strength, assuming that the investor will probably keep on pumping more money. He may not. The business conditions, the business model, which has been tested and tried and strengthened by the existing players, remains the same, and the existing players will be the bigger beneficiary instead of a newer or a smaller player trying to come up just backed by the international investments minority. Coming to the market and the performance of all the new age tech companies, food delivery companies, the fintech companies, which came in with IPO about 1 year ago, when the market was supportive and a lot of global money was coming in, a lot of domestic money was also supporting. Market was in a euphoric phase. I think we have moved far away from that. A lot of reality check has come in. More importantly, parallelly, what has happened is a lot of profit making sectors and companies, their prices and valuations have taken a sharp correction. So any incremental money which comes in into Indian market now will have two options. Do I get into tried and tested 5 year, 10 year, 15, 20 year old business model, a strong brands, cash flow generating, profitability track record? Of course, because of the recent inflationary issues and other things, recent past there has been a slowdown. Or do I go into loss making, probably visibility of loss for 3 to 5 years, new age companies which on any valuation parameters will still look very high? I think the large part of investment will go into the first set of companies, wherein, as I said, a lot of prices and valuations have corrected. The tried and tested business models and brand strongs. Just as an example, let's say consumer durable sector. So that's what will happen, and I don't the performance or the share price, stock price performance for new age companies will be more with the orientation of trading, short term trading, a little bit up, little bit down. But I don't think sustainable outperformance is going to come from there.
Just on the prospects of hospitality and hotels in particular, as to where or how much potential do you see? Because, like you just heard from the Marriott International CEO as well, for the next 2 to 3 years, he says sees immense visibility. We were just chatting with the management of Lemon Tree the other day, and they said that from consumer perspective, if you're unhappy about the ARRs right now, watch how it's going to grow in the next 2 years.
Yeah, so it's indeed fortunate that the whole industry, the hospitality, hotels particularly, have come out of the sharp recessionary business conditions that they were in because of the COVID. And let's keep in mind that we are currently going through the fourth or fifth or whichever wave of COVID. Hopefully, it shouldn't be that severe. But nonetheless, we have seen the business travel increasing. We have seen the personal travel increasing. We have seen the weddings and other festivals again getting bigger and bigger in shape, and that has resulted into the increased occupancy rate for the hotels. Of course, alongside has come in the increase in the ARR, which are likely to continue to go up. Let's also keep in mind that along with every demand increase, the supply increase also tends to come in into the place. And it's the same Indian players who have in the recent past announced multiple new hotel launches, large part of those either by taking the lease on the existing and by renovation. So it's not that it's going to take a longer period to start or a longer capital investment. Once the balance of supply and demand keeps coming in, the significant increase in ARR could continue to be a challenge. But nonetheless, there is an expectation that given the current demand, there will be some. Now, what has happened parallelly is in anticipation of that, we have already seen most of the hotel industry stocks having moved up and their valuations having moved to the upper end of the historical range. So that's where challenge comes. As we were discussing that the markets have been flat in last 2 years, the index level at large cap Nifty and Sensex is where it was 2 years ago. But in that period, there have been a lot of outperforming and underperforming sectors. So hotels has been one sector which, because of the increased demand post-COVID issues, has seen that kind of an outperformance. So for me, it's a puzzle whether we will continue to see sustained outperformance. Of course, the business conditions are likely to continue to improve.